So welcome everyone to today's Virtual Digital Economy seminar. Reinhold Kesel in Zurich will moderate today's talk, and he will introduce our guest in just a moment. Briefly, before we start, as usual, please send your clarifying questions to everyone in the chat window throughout the talk. Reinhold will manage the queue and interrupt the speaker at a convenient time so that you can ask a question or he can ask the question for you. We'll also collect all remaining questions for the Q&A after the talk in the same way, so don't hesitate to post any questions at any time. Today's session will be recorded, so if you do ask a question, you will appear in the recording. And also do feel free to turn on your camera to give the speaker a more interactive experience, but don't feel obliged. All right, great. So I'm handing over to Reinhold.
Yeah, thanks, Hannes. Thanks to all of you for tuning in today. I'm very excited to have Ting Li here with us today. Ting is Professor of Digital Business at Erasmus University Rotterdam, and she does research on firms' strategic use of technologies and how this affects consumer behavior. And one thing that I really admire about Ting's work is that she pays attention particularly to the newest technologies coming up. And so it's not a surprise that Ting today brings us another timely phenomenon, namely NFTs. And I'm very much looking forward to today's paper. And so Ting, thanks again for coming. The screen is yours.
All right, thank you. Thank you so much for inviting me, and it's really a great pleasure to be here. Today, this is a paper joint work with two colleagues, Ioannis Kanellopoulos and also Dominik Gutt. So in fact, Ioannis is our job market candidate for those who are hiring. Here is a promotion for him before we start the paper. This is a paper looking into the effect of NFTs. NFT, in fact, grab a lot of attention over the last 2 years or so, but it's not really a new phenomenon per se. It just get more popular over the last few years. So let's look at what exactly NFT affects the traditional physical products, which is probably something interesting for us scholars. Let's start by talking about, trading cars. Even for young kids, there is so much enthusiasm in collecting cars to trade, right? Pokemon cars or Ultimate cars. At least those are the cars that I see in my two boys, passionately collecting them and also carefully choosing which one to pick, opening them with surprises and trading them, anticipating potential increases in value. But for my other two co-authors who play passionately of basketball when they were young and collecting cards of their favorite NBA players has always been fun, but not easy because limited pocket money, right? Which card to choose. And the problem is getting, problem quote unquote, getting bigger because nowadays the merchandise world of the NBA grew exponentially. It reached new levels with the introduction of NBA Top Shop, which is the marketplace for NBA NFT platform that is our focus of today. Basically, an NFT-based collectible system of video clips that we can buy and trade and also collect. So now the choices become a different choice, right? And these NFT goods are added to the NBA merchandise and make our decision about what to purchase even more difficult. Naturally, as a scholar, as I mentioned before, we expect to see perhaps a cannibalization effect might show up between the trading cards and NFT collectibles. So in this paper, we try to understand what exactly is the economic effect of NFT introduction. So what is NFT, right? I'm sure many of you have already heard about NFTs. In a nutshell, and they are crypto assets that use blockchain technology to represent ownership of digital goods. They're different from fungible assets. For example, Bitcoin, that has the same value as any other Bitcoin. No other two NFTs are the same. As a result, their value depends largely on their unique individual characteristics, right? And virtually any digital good can be minted into an NFT, essentially transforming it into a unique artifact. And there's increased popularity Okay, and that had led to the emergence of multiple online digital marketplaces that users can buy and sell the NFT goods. And this is one very famous example. You probably have heard about it in the news. Basically, the traded value amounted to close to 70 million. And the art is made by an artist called Beeple. And this art is called The First 5,000 Days. So it's a collage of 5,000 pictures. The art is posted online ever since around the year of 2007. So, and this is GPG file and sold for over 60 million, making it the third largest auction price item for a living artist. So this happened in at the beginning of 2021. And in fact, the top two largest auction house, traditional auction house, Christie and Sotheby's, and they all started auctions of NFTs, and which made the NFT quite legit at this point. And there are a lot of anticipation of what NFTs can do to the traditional market. It is clear, I mean, NFT is a disruptive technology. I started shaking the domain of collectibles. Many collectors, like two of our co-authors, face a decision: should they actually spend their money on NFT collectibles, or should they buy the physical collectibles? Okay, which is a natural question that arises. How the introduction of NFT affects the prices of their physical counterparts. So economic theory basically suggests that introduction of NFTs will shift the demand away from physical goods, decreasing their prices. Oh, but in that case, I think that hypothesis failed to recognize that introduction of NFTs can also attract new buyers, right? Leading to a demand expansion. So really depending on how much demand shifts from the physical to NFT market due to the substitution effect, and how much demand actually shift from NFT to the physical marketplace. Okay, and due to the NFT, let's call it expansion effect, and the prices of physical goods can decrease, increase, or not change at all. So formally, our research question is the following: how does the introduction of NFT collectibles affect the prices of their physical counterparts? Okay, I would pause here for a minute and answer any questions that Reinhold can find online. Yeah.
There are no questions yet.
Okay. All right. So for our analysis, we examine sports trading cards and how they were affected by the introduction of related NFT market. For those who are not fan of sports trading cards, and let me just give you a short introduction of what they are. Sports trading cards are palm-sized cards, right? Like the ones I've shown before, and also like this one showing the picture. It's a picture of a professional sports player, right? And the cards are basically with verified quality that becomes more attractive. The information, as you can see, on top of this image, there are cards information inserted by the professional grading service organization. In this case, it's called PSA. The card information include the year, right, and the player, LeBron James, and also the official grade, 10 out of 10. Okay, from 1 to 10, which is given by the professional grading organization. Usually, you can get it with a paid fee for this. And the NFT platform that we focus on is called NBA Top Shot, NTS for short for this. The NBA Top Shot allows its users to acquire NFT equivalent of NBA sports cards. They come in the form of copies of short video clips from NBA highlights called moments. Moments basically introduced into the market through a limited number of packs very similar to how you get the traditional cards. They periodically become available for purchase by NBA Top Shots. Users can buy those packs, can open them, digitally open them, and receive a predefined number of moments that are randomly sampled, okay, from a predefined, a pre-specified pool of moments. You can think of these cards as traditional trading cards that where you buy a pack and contains cards when you open them, and sometimes come with surprises because you get a more valuable card sometimes, right? And of course, you can also build a collection and trade those cards on marketplaces available also on this NBA Top Shots. So let's have a look of how the Top Shots this moment look like. Here's the image of it. There are some factors that influences the value of those cards. It's the player, LeBron James in this case, and also the action of the moment shows. And could be a dunk, a block, or layup, and also the rarity of the moment. It could be common, could be rare. In this case, it's legendary. And also the last one is, well, the serial number of the card. In this case, it's 12 out of 59 cards. Okay. And I mentioned briefly about this marketplace where you can actually trade you cards, NFT cards. What is shown here, I mean, some moments is really, really popular and sought after, and they have been sold for, you know, in this case, the first one is close to $250,000. Obviously, they are outliers, but they are a clear indication of how much some users are willing to spend for certain NFTs. And here is the platform. Open access to the beta version towards the end of 2020, around October also. Within about 6 months after its launch, it was already valued at about $8 billion. So there's a lot of enthusiasm just based on this NBA and NFT cards. Yeah. Let me pause and see whether there are any questions.
I don't know whether it's directly a question, but Komen Strumpf has a question and provides a link to the market that seems to have collapsed. So he has maybe he wants to elaborate a bit more on that. I think you can unmute yourself. Or it was a thumbs up, so you can answer right away. The question that I have, whether the market seems to have collapsed for these Top Shots.
Not what I know. So there was a baseball platform that didn't really go well. So that's something that we will talk about later when we talk about analysis. Yeah. So not NBA Top Shots. Yeah.
All right, you can go on.
All right, then if you know the setup, the empirical setting are all clear to you, let's talk about data, methods, and what do we find out here, right? As you can see, we're looking at a shock, right? So there were traditional cards, and as an introduction of the NBA Top Shot as a very interesting disruptive technology here, what happens to the traditional trading cards, right? Although NBA Top Shot was introduced in October 2020, okay, it didn't really receive much attention, as you can see here from like two graphs here. The top one shows the Google Trends data. At the bottom, what you see is NBA Top Shot sales data, okay? And it only picks up towards around mid of February or so in 2021. Basically, we chose a date, 19th of February 2021, as introduction data of NTS, as we proceed with our analysis. Obviously, I mean, there are many questions that you may have at this point. I mean, seems like a somewhat arbitrary date that may raise concerns But in fact, we run really a bag of different robustness check, varying different dates, 20 days before and 20 days after, to really track the robustness of the result, which we can show later. So for our analysis, we use data that we scraped from eBay, because eBay, in fact, takes about 87, close to 90% of the total US sports trading cards. And in total, we have about 1 million observations of past sold auctions of greatest sports trading cards. And less than half of them, slightly less than half of a million observations about our treatment group, that is basketball cards. Okay, and slightly more than half that are our counterfactual control group baseball cards. Baseball trading cards basically lend themselves favorably as a control group for a number of reasons, and primarily their similarity in popularity and also trading model. So although they refer to a fairly different sport, but they are less likely to be affected by the introduction of NBA Top Shots. Okay, and we gathered data for about 10 weeks, 5 weeks prior and 5 days after the shock. Okay, and we have a variety of information available for every card, includes the card's title, the date of sales and sold price, so on and so forth.
Ting,
we implement
just short.
Go ahead.
Interruption, because there are some people raising hands. I don't know who was first, but maybe we start with Marit. Do you have a question? Yes, can unmute yourself. No.
Okay, yes, hi. So just a clarifying question. While these physical trading cards, I can trade those anywhere, right? I can sell them on eBay or anywhere else. I can sell them to my neighbor. So, but how about this new thing? Like, where can I actually trade these moments? Is it only on that specific platform?
Yeah, thank you, Marit, for the question. So for the traditional sports trading card, you can, like I said, roughly about 90% of all those cards were traded on eBay. Of course, you can sell to your neighbors, but in fact, 90% of those transactions happen on eBay. About NFT, those moments, NBA is an official NFT platform, that is this NBA Top Shots. So you can buy those moments directly from the platform. And there's also a section, it's called Marketplace. So that's the picture I showed, right? With very high valued LeBron James cards of, approximately about $250,000. That's basically transacted also on this platform. So this platform, NBA Top Shot, has a section, it's called Marketplace, where you can transact with other buyers and sellers basically on this platform. Yeah.
Okay, thank you.
All right, there's one last. Ioannis, you want to say something?
Yeah, hi everyone. I'm actually one of the co-authors.
Yeah.
So to add to the answer to Marit, so everyone can trade their moments through TopShot. You can try to circumvent that by gifting your moment to someone else, but that would be, a very low number of people who actually, gift the moment to someone else and then receive the payment outside the platform. And actually, I wanted to add to the answer also of Coleman. So yes, it seems to be that the market has gone down, but we suspect that most of that reduction, although we have no empirical evidence, is because the company that owns NBA Top Shot, they actually have failed to recognize the needs of the community. And for example, they produce new packs and they only make those available to people who have already purchased a lot of moments. So there was a very negative sentiment on Twitter last year and a few months ago, but they've actually lately started to take actions to address that.
All right. Thank you very much. Maybe one last comment and then you can go on, or last question by Young One, whether there are any seasonality concerns given that the baseball season doesn't start until April and NBA All-Star game is around this time window.
Yes, so in fact, there are quite extensive analysis to address the seasonality concerns. Ioannis, thanks for jumping in, and perhaps you can take that one as well.
Yeah, so actually the MLB season, as you say, it starts after our observation window. The NBA season is underway during our observation window. So to check whether there are any seasonality concerns, we also use, so the data that Ting presents right now is from 2021, right? So we also use data from 2022, and we find, and in 2022, the seasons, the MLB and the NBA seasons were, they started at, similar dates. So in 2022, again, the MLB season started after our observation window, and the NBA season in 2022, again, it was ongoing during our observation window. And for the 2022 data, we find no effect when you use the same SOC date. So we believe that perhaps this evidence suggests that this is no seasonality effect. We also use the 2021 data, the 2022 data, and another data set, and we saw that the parallel trend assumption hold. Well, we do a lot of statistical tests, so we saw that seasonality is not a concern, at least from the evidence that we gather. Yeah.
Thank you. All right, I hope that addressed the concern of the seasonality. Just to continue, I started talking about we implement a difference in difference estimation strategy, right? So before we jump into the analysis, we check for the validity of the parallel trends assumption by looking at the daily log mean and also the weekly log mean prices of the sold baseball cards and the sold basketball cards for the observed time window. So the graph shows that the parallel trends assumption is not violated. We also conducted additional placebo tests to support this, but for the time constraint, I'm not going to present it. Let me just move around to switch on the light. So this is the DID specification. The focus of interest here is on the coefficient for the aftershock dummy and also the interaction with the baseball card dummy, right? So if you look at the first model, the coefficient is negative and significant, and for about 20%. So basically the introduction of NFT market reduces the price of the physical goods market by about 20%. And in the later models, we slowly introduce and settle the model with additional fixed effects. For example, in the second model, we included seller fixed effect. Basically it's the, and there we observe about 5% of reduction, which seems to be stable for the remaining models as well. Which is roughly about reduction of about $30 also. In the third model, we introduced also rolling supply estimate, and that's total cards of the same sport that was sold in the time interval of a plus minus of 5 days. Okay, and for the fourth model, for the last model, we also include NTS popularity. Basically, that's daily number of buyers that are active on this marketplace. As you can see, the estimate stays about the same. It's roughly about reduction of 5% when it comes to log price. Okay. People might wonder at this point, why not auto control for the card fixed effects? This is a little bit complicated in our case because unlike other product categories on eBay, in fact, the collectibles do not really have product identifiers. So we do want to rule out those unobserved time constant card heterogeneity, right? So in fact, there, Ioannis did a tremendous amount of work, developed an NLP algorithm to construct our own product ID, okay? Our model basically identifies both the players and also the year that a card, a sold card refers to. And so after including that also in the model, which I don't have a table here, but just to report to you, the estimated coefficients are very similar to those of our main effects. And this R package are also made available. And there's also instructions on how to run the code.
Maybe one short interruption. A question by Larry White, I think.
This is Larry White. I was going to ask about the fixed effects for individual cards. You just addressed that. But going back to the previous slide, it really looks like it is the seller fixed effects that is really doing all the work in your regressions, because the minute you enter that set of fixed effects, your R squared jumps up from 0.05 to 0.6 and some change, and then doesn't change very much for the remaining fixed effects. And your coefficient drops from 0.2 to the range, somewhere in the vicinity of 0.05 and doesn't change very much. So it's basically the seller fixed effects that seem to be doing, almost all of your explanatory power. No, I mean, you still have the significant effect of the aftershock and basketball. Yeah, that's there, but I think it's just worth noticing. It's the seller fixed effects that is really doing the lion's share of the explanatory work here.
Yeah, thank you for the comment. Thank you for the comment. So later we have a few additional analysis looking into seller side, and hopefully that can also explain a little bit more about what's going on here regarding sellers. Okay, thanks, Larry. So substitution, it looks like there is an evidence, right, so far for substitution effect as we anticipated. If that's indeed the case, we should expect a more pronounced price decrease for the cards for which there are NFTs, because not all the cards have NFTs. And essentially, at this moment, there are cards of players that are currently active in NBAs have NFTs, and they are what we call active players. This result table that you see here clearly shows that the result is negative and significant only for those active players, right? And for the inactive players and in NBA, then the result is not significant. And how about quantity? We talk about price, and how about quantity, right? In the presence of substitution, we expect not only the prices, but also the quantity of sold cards to decline, right? So we use data of all the listings aggregated at the date, sport, and also seller level. And the DID specification is also similar. And the log quantity is our dependent variable here. And we see also clearly a 4% reduction in quantity of sold cards. So what is going on here? Okay, let's look at what drives substitution. Is it buyers or is it sellers? And who are actually reacting to the shock? So in our data set, we actually consider two different listing formats. One is called auction. The other one is called buy it now. Okay, and auction is, well, basically the buyers can actually put up their price, and to us, that's an indication of buyers' willingness to pay. And buy it now is reflect the seller's reservation price. Okay, so in fact, by running this analysis, by splitting data this way, what you see here is we can see that there is a 10% drop of a buyer's willingness to pay, okay, and 5% drop of a seller's reservation price. All right. So let's do a small recap here. What we have done in our main analysis following the DID specification, we observed there's a reduction of price, there's a reduction of also the quantity, okay, and there's a clear substitution effect. And we also analyze based on the listing format that perhaps there is stronger reduction on the buyer's willingness to pay, about 10% versus the seller's reservation price. But so far, it seems like we didn't really touch upon anything that have to do with NFT, apart from the shock that came with the introduction of the NBA Top Shot. But NFTs have unique characteristics, right? And that's how we started this paper. So we have to do something with it to make our paper go beyond just simple analysis of substitution effect, right? And I'm going to talk about three main characteristics. One is physical quantity, built-in reputation, and also digital scarcity. Let's start with physical quantity. An advantage of NFTs is that they cannot degrade in quantity, right? This could attract demand away from cards of high quality towards NFTs. If it happens, we could expect the prices of high quality cards to be more strongly and negatively affected by the shock, right? Well, there are professional grading services, as I mentioned before, and there are two of them mentioned here. One is called PSA, the other one is called SGC, sports card grading. Okay, so we run the specification separately for the cards of higher quality, which are cards with grade higher than 9, and including 9 and 10, and also for the cards of low quality, and see whether the result is consistent to what we expect, right? So we find that prices of high quality based basketball cards drop even more, right? Whereas the prices of low quality cards were not affected, supporting our expectation. How about reputation? User activity in marketplaces hinges on trust between participants, okay? And we know so many stories about how marketplace might crash because of lack of trust. On NFT marketplace, trust is not really an issue. The promised NFT is guaranteed to be delivered to you after transaction. So eBay users' reputation scores, well, is the way that how traditional marketplace using this seller feedback score to foster trust, right? So what would estimates say if that's the case? We should be able to see that the listings of reputable sellers affected more or affected, and that's indeed the case. While those of non-reputable sellers are not significantly affected. The last characteristic, digital scarcity. Scarcity is a common concept, right? And producers who, for the traditional card, they print a lot of copies for some cards and fewer copies for others. Right? We know that the scarce card could be highly valuable. But for digital goods, without NFT, that's really hard to achieve. Right? But NFTs can be made scarce by restricting the copies of goods that are placed on the blockchain. All right. So if in that case, if there are scarce cards and investment decisions can be largely affected by the number of available moments, right? If there's a large number of moments available for a player, then this could attract more demand away from cards of that player. right? So that's indeed what we expect, and that's what we see here in the result. The card prices of players with many NFTs are more negatively affected, all right, than those of players with fewer NFTs, which in fact, the coefficient is insignificant, right? And in fact, in those specifications, we elevate concerns over player popularity, impacting a player's total number of NFTs by controlling also for card fixed effects. So far we look at 3 types of NFT characteristics, right? Better cards, right? Sellers of better reputation, and also players with more cards. And those cards affected more. Okay. And this is still a short term. Remember that we look at a time window of 5 weeks prior to the shop date and 5 weeks after the shop date, right? So 10 weeks in total. That's our observation of the analysis so far. What about a longer time frame? Okay.
Maybe before we jump to the longer time frame, one quick question by Sejun Park.
Yes, thank you. So I have a question regarding, like, clarification question regarding the number of the car sales that's listing that was available on the market for physical cars, because I was not clear whether individuals go to NFT because there is not many available sales listing for the physical cars, or whether the NFT is considered as a more valuable and they go to the NFT and choose to buy NFT instead of the physical card.
The voice are really low on my side for you. So perhaps Ioannis, did you hear it clearly of the question? Let me turn up the volume on my side. If you did hear it clearly, and perhaps you can help to answer. Otherwise, I will need to ask him to repeat.
Yeah, I can repeat. So can you hear me clearly?
Yes, it
Yes,
sounds
so,
better now. Yeah, sorry.
Thank you. Sorry. So my question is, I'm not really clear about whether individuals, the customers or the investors go to NFT because maybe they could have some specific preference for some players. However, there can be some not many available sales listing for physical cards. So I'm not sure whether they go for NFT because there is few sales listing for the physical cards, or they consider the NFT as more valuable than the physical one and choose to go to the NFT, not going to the physical card. So because I feel like although the production for the physical card can be unlimited, but there was a certain time periods, and then after some time periods, some of the cards for some players can be very rare and may not be that much available for the investors. So I was wondering to see what is the main logic or mechanism to drive the result.
So I'm still trying to understand the question. So you're saying, okay, what exactly drives the reduction in price, right? So why would people actually go to get an NFT if there's a substitution effect? At what point do they actually move away from the traditional cards and go to the NFT marketplace?
Yes. So
is it
another? Yes. Is the substitution effect because of another sales channel, or is it because of another value that NFT has?
Yeah. So let's think about this whole substitution. I mean, this is not a new question. So, and as in IS literature, there has been many work about digital products versus traditional product, right? So, CDs versus streaming music, traditional books versus digital books, and so on and so forth, right? So there's clearly a substitution effect. If I only have a certain amount of money that I can spend on a particular product, right? In the traditional way, it's probably the traditional trading card. And now because the digital card become available, then perhaps I would opt for buying a digital good, right? So the NFTs. So in this case, they'd rather spend money that way. So that's also our, sort of motivational story. The guys that are really fond of collectibles, NBA collectibles, then they only have this amount of money they can spend on buying cards. So the question is either, this NFT new card, right, looks fancy and moment that's really video clips, or the traditional cards, right? So I think that's the choice of individuals. So what type of product should I opt for? Right. And what we find by looking at this listing format, so what it seems to be driving it is there's a deeper reduction, okay, comes to buyers' willingness to pay compared to sellers' willingness to pay, right? And clearly this is really related, right? But perhaps there's a stronger of a wish to move away and buying those NFTs from the buyer side, and clearly you see that there's a reduction in prices that people pay for the traditional cards, and subsequently, and in order to sell the cards still on eBay, then the sellers also would have to reduce their prices, right? So their listing prices on eBay, and you see that's probably what happens on the platform. Does that answer your question, Sandra?
Yes, thank you.
Okay, thank you. Are there other questions?
I think your co-author wants to say something too.
Okay, please.
Yeah. So to add on Ting's answer, so one thing we do is by controlling for card fix effects, we also control, in a sense, for the popularity of a player. So for the popularity of their cards, which could also alleviate concerns about, how many copies of a card for every player there are. And also there was one more thing that so we also recently ran a survey in order to understand the differences between consumers and buyers of moments and consumers and buyers of physical cards. So the demographics are pretty similar, and the reasons why they buy the products are also pretty similar. We're currently analyzing the data, so I don't think we will be able to present over here, but we should have it soon, within like 2-3 weeks on a new version that we will have online, in case you would like to have a look at that.
Thank you very much. I think we can take the other questions in the Q&A and let you finish.
All right.
That's all right, Larry.
Thanks. Okay. Let's continue. We talk about the short-term effect, right? So there's a substitution effect in short-term. How about long-term time window, which was very hard to do from eBay itself. So Ioannis collected data, new data set, leveraged a search tool called PWCC, which is a company that collaborated with eBay, using the search terms of NBA, basketball, MLB, and baseball. Collected data set that spans, in fact, 10 months. Okay, a couple months prior to the starting of our time window, and a couple months afterwards. So between June and April of 2021. Okay. So using this extended observation of 10 months, okay, the results are quite consistent with the results that we show in our main analysis. So here you're looking at extended, okay, market has extended in column 2 and also column 4 here. That also supporting our main findings on the extended time, extended observation window. What we also did here, quite interestingly, is for those who challenge us on the choice of our starting shock date, we actually use the actual introduction date of NBA Top Shot, which is October 2021, as a shock date. Okay, in that case, because our chosen shock date will be after this introduction date, right? So we expect the coefficient estimate of the interaction term to be diluted, meaning that it will be smaller in magnitude and weaker in terms of significance. Okay, And that's indeed the case. So the interaction term is negative and significant, but only at 10% level. Okay. So basically market players did not really react yet, okay, as reflected by the changes in car prices in the first few months after the actual introduction of NTS. So how important it is, right? So is it meaningful? We look at the economic implications here. So market of trading car collectibles is valued at about more than $10 billion US. Our estimate of 5% reduction implies a loss of market value of more than $500 million US, right? And we also conduct back of envelope calculations to assess the economic value of introducing the NTS for eBay. eBay revenue from basketball trading cards are reduced for about 35K on a daily basis after the shock. And although eBay also introduced NFT, but that revenue also only brought in about 2,500 on a daily basis. So there's still quite a big gap there, right? And as I mentioned in the last time, allowing the trade of NFT, which is what eBay did afterwards, and could only recover a small part, that is 7% of the daily losses. Yeah. So to wrap up, so that we still have a few minutes for Q&A. In terms of contributions to the literature, well, this clearly is a paper on evaluating the economic impact of emerging technology of NFT. And in fact, it is first empirical work on NFTs. There are quite a few papers out there and ongoing work of a lot of colleagues. Some of you probably are in the audience today. They're very actively looking at technologies like NFTs and metaverse at large, about the ARs and VRs. And this is one of the first empirical work related to NFT and its economic impact. And it is also about spillovers across physical and digital markets, which is quite an interesting subject to study by scholars. We investigate the case of minted digital goods, right? Ioannis did a great job and also made this R package by going through and labeling all of these cards so that we can have the product ID, which was not available directly from eBay. And in terms of practical implications, who should care about it? I think we speak to different groups of different participants here, right? So NFT platforms, online marketplaces, traditional auction houses, individual investors, as well as firms like brands. Let me just speak a few words about some of these categories. For traditional marketplaces or auction houses, right? And there has always been a fear for, what I say here, once a consumer has gone digital, she's unlikely to come back. Right? So there's a great fear of it. That explains to some extent of why those traditional auction houses like Christie and also Sotheby's, they started launching NFT marketplaces. In fact, 2021 October, okay, Sotheby's launched its NFT exclusive marketplace, Metaverse. It's the first of its kind among the blue chip auction houses. And all the NFT sales at Sotheby's will now take place on this cutting edge platform. Okay. The platform has already begun its sales for quite some time now, and it's going strong. And they need to watch out for sales cannibalizations, right? For those traditional marketplaces like eBay. And there are really incentive out there, should be, for them to retain reputable traders, for instance, like in our analysis, right? So there should be a number of actions, and what we have seen already on eBay that they started working with different parties and try to really incorporate those new technologies so that the cannibalization won't be as strong as what they have experienced. And for NFT market, right? There's certainly more to come. Sorare from soccer and also boxing, cycle, cricket, Pokemon. And there are a lot of different initiatives out there. At least the equivalent version of those, traditional marketplace could anticipate a short term, if it's not long term, impact on demand, right? And there are different ways to do that, and some succeed, some not, right? So NBA Top Shot obviously did very well, but for instance, the equivalent version that goes to the baseball market that didn't really go well has a number of reasons for being that. I mean, one thing, for instance, NBA Top Shot actually works with fiat, right? So you can buy without opening a wallet, just buy it with dollar. Right? Makes it really easy and low switching cost for individuals instead of using crypto. That's what baseball NFT marketplace actually did. They also had a very static image rather than video clips that make it fancy and new as technology to adopt. So there are many, many different factors that could play a role in the NFT sales price as well. So that's something that that NFT marketplace should watch out. The last page and also the last group that we think we are speaking to are brands, right? So the image you see here, Nike basically bought those virtual shoe company that makes NFTs and sneakers for the metaverse. And companies really trying, not only trying, but in fact, there are demonstrated success for digital consumer connections using those, smart digital collectibles. And they also try to link those with their physical products, right? Shoes, physical shoes, and link with NFTs, digital physical collectible, collaborative and more interactions to enhance user engagement. And that's what they have been trying all along. That's my last page. I think with that, I would like to share the link of the latest version of the paper, and happy to take any remaining questions you have. Thank you.
Thank you very much, Ting. So the first question was by Larry Boyd.
Okay, I really like this. Just a couple of reactions, and partly the journal editor in me is going to come out. So first, at the beginning, you raised the possibility that the introduction of the NFTs could, what the marketing folks would call expanding the category. They think about, and even economists, that you advertise a specific brand and a specific product, but that, expands consumer consciousness of, gee, there's a category that product is in, and maybe the advertising for this product also expands the category. It appears that at least over the time frame, you haven't found that expansion of the category. You might want to tell us that, and also try to think: is there, the longer the run, the more other things start to get in the way. But you might think, geez, it didn't happen within a month or two, but maybe 6 months, 12 months of NFTs might raise consumer consciousness that, gee, there are these trading cards in basketball out there. So that's one reaction. The other is, I want to go back to your slide where you talked about scarcity, and you showed us two regressions. The one that with the number of NFTs below the median and above the median. And my initial reaction was, geez, you've got a continuous variable. You've chosen to break it up into a dichotomous at the median. Why did you do that? Why do you think it's not linear? All right, if it's not linear, maybe introduce logs as a way of getting non-linearity into the picture. If you really think it's dichotomous, tell us why you think it's dichotomous, and of course do a robustness check. Tell us, show us what happens at, say, the 25 percentile point and the 75 percentile point, not just the 50 percentile point. So both of these things, it's bringing out the journal editor in me. But I like let me again come back. I like the paper. I like the basic ideas here.
Thank you, Larry. I like the journal editor's point of view, and we hope our journal editor, the paper is actually under review at the moment, so we'll say the same thing. First question.
Hey, I'm giving away my intellectual property for zero, okay? Giving it away for zero.
Thanks a lot. So first question about, this vertical and whether it spans into a different product category. Well, we only have one product category, right? So we have been talking about only the physical as well as the digital collectibles of NBA cards, right? So in that sense, I don't think we can claim anything that goes beyond this vertical product category, right? We just don't have that in our data, and that's not some generalizability we are trying to do here. And baseball, in fact, is a counterfactual. It's a very convenient counterfactual. We do have a number of, the homeworks that we have done to justify why this is reasonable counterfactual. And in fact, we didn't present here, the baseball card were not affected. So that's also some analysis we did. But to make sure that this is a good counterfactual to use, the same way that we run tons of analysis based on the choice of shop date, right? So I hope that answers the first question.
Let me just add, you might want to add early when you introduce baseball as the counterfactual that tell us they haven't gone digital, and so it's really is a somewhat I don't know whether it's cleaner comparison, but give us a little background on these other trading cards. They didn't go digital, and maybe even tell us why. But a little bit more about that.
So part of the reason we can't really say it because there was an NFT for baseball, but it was debunked. Right. So they didn't really go well. So you can look at it, but there was nothing. But so that's something. Yeah, sure. That's a good comment. We should have said it earlier on to clarify why baseball, and there wasn't any successful digital related marketplace for that. Right. In fact, later, after our observation and after our study, in fact. So, and right now, if you check out, and there's also a baseball NFT marketplace, but also didn't really have the peak as the NFT for NBA. So to answer the second question, I think that's a great suggestion. We should definitely do it. We did. I think you paid close attention in the note. We use the median. We use median and cut the data and to run this analysis, right? And we could also do for the percentile to try to understand exactly where, right, that we see or lose the effect. I definitely agree with you. Yeah, that's a very good point. Thank you, Larry.
But I like it. Thank you.
Thank you very much. I'm afraid we are out of the official time of the seminar, but of course we can just stick around in the Zoom meeting and still ask questions. And so,
thank you. Appreciate
great
it.
applause for Ting for this great and interesting talk. But before we wrap up, let me briefly advertise the next talk of the VIDA seminar in 3 weeks on the 21st of December, same place, same time. And we look forward to having Ajesh Rambachan from Microsoft Research here with us.